Hi everyone, welcome. Welcome to another live video from Northern Affinity. I am delighted to say I've been joined by Sabrina today, who is good to talk to us, as you may have seen on the screen, and I'll put up now about sick pay for the self-employed, but income protection, I guess, is the technical term that will be used. But I think it's something that a lot of people who are self-employed are not aware of. And if they are, maybe don't understand how it can work for them. So Sabrina's hopefully going to give us a bit of an insight into that. If anybody does have any questions as we go through, please do put it in the comments box, and we'll try and get to as many of those as we can as we go through. And same for anyone who's watching this on demand afterwards. Please, feel free to put the comments in, and we'll try and get them answered afterwards when we can. So. Sabrina, do you want to quickly introduce yourself so I can stop talking?
Yeah, no problem. Yeah, my name's Sabrina. I'm a mortgage and protection advisor. And one of the reasons I wanted to talk about this particular subject is that I quite often speak to business owners who have maybe come to me for a mortgage, and actually when I talk to them about income protection are really surprised, really sort of shocked that no one's talked to them about it before. And it is a real concern for most people who are self-employed that if they can't work due to sickness, how are they going to be able to continue to pay the bills and have that income? So it puts a real sort of it solves a real concern for people, and it can give people a lot of peace of mind knowing that those policies are in place.
Yeah, absolutely, Sabrina. I agree. It's something I've come across in previous lives, and it's something that not enough people just know enough about. So, So if you're ready to go, well, I'll bring up your presentation and I'll hand it over to yourself. And like I said, if anyone's got any questions, please do feel free to put them in the comments box, and we'll cover as many as we can.
Brilliant. Thank you very much. So the reason I wanted to talk about this, like I said, is just I don't think many people are aware of it. I think there's a lot of business owners out there who have this constant worry about what happens if they become sick, and this is a real good solution to that problem. So the sort of things that I think most business owners do ask themselves quite regularly, and certainly would be the conversation I'd be having with you if I was talking to you about this, is how long you would be able to continue either paying yourself if you're a limited company director, or if you're a sole trader. How long would your income last before it stopped if you weren't able to work due to sickness? And I think it's really important for us to have those really quite frank conversations with ourselves to say, actually, maybe my savings would last 6 months or a year, but what would happen after that time? Maybe you would be able to continue to pay yourself as a limited company director, but what would that do to the business and any retained profit and value that's in the business? So once we have those conversations and we can see where the need is, it's really easy for us to plug that gap with these types of policies. These types of policies are also really, really affordable. So I think some people worry about that, but we can really tailor that to your needs. What we can do as well, we don't necessarily have to cover your whole income. We can actually cover just maybe a shortfall. So if you've got a 2-income household, it might be that actually the bills can be paid mostly by the main earner, but there is a bit of a shortfall there, and that maybe that's all we need to cover as well. But it's about understanding what gaps there are there that need to be plugged. So what is income protection? So essentially, it's an insurance policy that will pay you an income in the event of you've been unable to work due to sickness. And that sickness is not a defined list of illnesses like it is on something like a critical illness policy. It is literally, if you're too ill to work and your doctor has signed you off work, then you will get a monthly income. It tends to pay up to about 60% of your income as a cap. And that's purely because the benefits of the protection policy are paid tax-free. And potentially you might get some benefits and things like that if you were off long-term sick. So it brings your income roughly up to where you would expect it to be if you were working. And it does also cover you for your own occupation. One of the things that people worry about sometimes with these insurances is that the insurance company will say, well, yeah, you can't run your business, but as long as you can stack shelves in Tesco, then we're not going to pay. But actually, insurance companies have much improved with this sort of thing now, and they actually will pay if you can't just do your own occupation rather than any work at all. It's one of the definitions I want to really be clear on is that it's not to be confused with the PPIs. A lot of people worry that income protection and payment protection insurance are the same or similar. The reason there was so much mis-selling with PPIs is because the whether you were eligible for that product was actually decided at the point you came to make a claim. So you might have been paying out on that policy for 10 plus years. You come to make a claim and they actually say to you, no, you're not eligible for this product. And one of the eligibility criteria for this product was actually that you weren't supposed to be self-employed, yet there were self-employed people up and down the land that had this type of policy that they should never have been paying for. And hence the mis-selling scandal that came from it. The big difference with income protection is that it's what we call a permanent policy. So all the underwriting gets done up front. They check, you do a medical questionnaire. They'll check things that they will use to decide whether they're going to give you that premium or not. So they'll ask you your height and weight and occupation and your smoker status. They'll ask you some medical questions that will dictate whether you're an additional risk to them or not. But once that policy is agreed and put in place, they can't take that policy away from you. The only way that policy will go is if you decide to cancel it. That policy will stay with you for the period of time that we've got that for. And as we'll come on to, you can make multiple claims on that policy. So it's not like you make a claim and the insurance policy's disappeared like with the life cover. So it is very, very different to PPI, and it's significantly more secure than a PPI policy. And I think it's important to understand the distinction between the two, because some people I speak to certainly do get mixed up between the two. There's lots of ways that we can tailor make this policy to suit your needs, but also your budget. So there's quite a few things that we can do to make sure that even if you come to me and say, actually, I can't afford to cover my whole income, but there might be things that we can do to cover some of your income or to reduce the cost on that. One of the things we can do is the policy will put in place a deferred period. So that's the period of time at which you have to be ill for in order to claim. Now, if you do the shortest deferred period, then things like, a broken leg, a bad bout of flu, you're going to come into that mix because you're probably not going to recover within that time. So the risk to the insurance company is quite high, and the cost reflects that. But if you start to put a deferred period in place for 2, 3, 4 months even, assuming that you've got the savings to support yourself in that period, that actually drastically reduces the cost down. And it means that, yes, it's only paying out if you've got more severe injuries, but the cost becomes much more affordable. And we tailor make it so that it fits with what sort of short-term savings you have and what you think would be doable for you. For some people, we need to go as early as possible and we have to take that higher premium. But it's about making sure that policy's got the most value to you overall. One of the other things we can do to potentially reduce the cost is most income protection will cover you up until retirement age. So your income protection will policy, let's say we took it out today, we do it up to age 65. If you were to make a claim, say 1 month later, and let's say that claim is for something you're never going to recover from, in theory, that policy will pay out from that date right up till age 65, which is brilliant, a massive comprehensive cover, but you can imagine the risk to the insurance company is quite high, so the cost reflects that. A short-term income protection policy would put a cap per claim of, usually the most standard one is 2 years. So in that example, you'd make a claim, hopefully you'd recover within that 2 years, go back to work. If you didn't recover, then the payments would pay out for 2 years and then they would stop. But it is per claim. So if you had gone back to work and you made another claim a couple of years down the line, the 2-year sort of clock starts again. So it does still offer a huge amount of sort of comprehensive cover, and it does still give you sick pay, but it doesn't, quite often it does reduce the cost significantly. So the conversation I always have with my clients around that is, yes, if we can fit it within the budget, you'd always go for the full income protection. But if it's a difference between having income protection or not having income protection, then we can consider this sort of middle ground option, which offers a really good comprehensive cover as well. It just has that cap on it. And the only risk with that is that you end up with a longer term illness that lasts for longer than the 2 years. But most people who do claim on income protection policies, they tend to be for a year to 18 months, tend to be the sort of standard average kind of claims. We can add in different benefits as well. So we can add in things like fracture cover. This is really useful if you do sort of sports and things like that, and you get a lump sum payment if you have a fracture or a break, bone break. We can add in things like medical, private medical cover, and that will allow you to, obviously, in theory, get back to work quicker. So the insurance providers sometimes provide a package that will put those two policies together, work together to get you back to work quicker. So it's a benefit to them and to you. And we can do things like link it to inflation, so that as inflation rises, the amount of cover that you've got rises, and that means that you're protected even in years to come with the kind of policy that we've got and we put in place. We kind of future-proof it as much as possible. One of the other things that we can add is something called waiver of premium. Now, this is a policy where if you were off sick, one of the last things you probably want to do is find the money to actually pay for the insurance policy that's paying out for you being off sick. So waiver of premium is like an insurance policy that pays your policy for you while you're off sick to make sure you get that continuous level of cover. So there's lots of things we can do with that to tailor make this to your budget, but also your needs as well through the life of the policy. There's lots of things we can do as well through the life of the policy. These types of policies are quite flexible in that throughout the life of the policy, you can, if you have certain life events like marriage, divorce, and so on, you can actually increase the level of cover that you've got. And you can increase that, but still on the terms that which you got your policy for. So where this is really important is if you had a situation where you took some income protection out and you were perfectly fit and well and healthy, but then you got something, you were diagnosed with something later on that meant that getting insurance would be difficult, you can actually increase this level of cover without necessarily having to start a brand new application where we have to start declaring this pre-existing condition that's been diagnosed since your initial application. So it gives us something to potentially try and keep that insurance policy for as long as possible, because you are never going to be as fit and healthy and young as you are on the first day that you take out an insurance policy, and all of those things factor in terms of the cost. The other thing that I think is important, so if you're a business owner, obviously you being sick is a concern and a problem for most people. But there probably is business owners that are saying, well, actually, my business can run pretty well. I'm more worried about if my manager or my, sort of co-director or somebody within the business, if they go off sick, actually, that's more of a problem for me. So you can actually get something called executive income protection, and essentially it's your business paying for somebody within your company to have sick pay. So the policy is owned by the business, but it's written on what we call life of another basis. So the business owns it, but you're insuring a different life. So it might be that you've got a key person within your business that you couldn't actually run your business without. And if that's the case, we can again take that concern away. We can show you that you can pay that person sick pay, but it's not going to be a massive cost to the business because you've got the insurance policy in there to protect the business. There are some differences with executive income protection in that it is tax deductible. Also, you can cover a higher amount of the income. You can cover up to 80% of the income, and you can insure the pension contributions that you make on behalf of your member of staff, so that you can actually make sure you can continue to give them that level of benefits that they're receiving as an employee, but also make sure that it's not a massive cost to your business if somebody who is a key person in your business is unable to work for a long period of time. And like I said, that can be all owned within the business.
Sabrina, so is the executive income protection, is that what used to be known as key man insurance?
Yeah, it's a type of that. I mean, now it's kind of split into two categories. So if you've got kind of executive income protection, which I'd call that sort of what the old sort of key person type policy. But really, you probably only want to do this for one or two people in your business. If you've got a bigger group of people, you can actually go down the route of group income protection, where you might be insuring, if you've got 10 members of staff, for example, you might actually insure all of those 10 people under one policy, whereas this one's for an individual. So it depends on how many key people within your business that you've got, which direction you'd go with that. But yeah, it is pretty much what we used to call sort of key person insurance. Yeah. And like I said, it's tax deductible, and it's a really good way of protecting your business, both making sure that person continues to work, or you can replace that person, or they're getting all those benefits, but also making sure that it's not a big massive cost to your business if that person goes off, and you've still got to potentially be paying them an element of salary depending on what their contract is. The other thing with this type of insurance, income protection, is slightly different to something like life cover. So with life cover, you tend to find that most claims are made right at the back end of the policy. You'd expect the risk to increase as time goes on. But with income protection, the biggest chance of you paying out something within that time is there's actually quite a big chance of you making a claim within the first 5 years of that policy. So it's quite interesting to sort of make sure you've got that up front as quickly as you can, obviously, to make sure you're covered as quickly as you can. But also, the insurance providers tended to, they got to a point where they actually really struggled to compete on price. So they started to kind of compete on the added benefits that they could give you. So a lot of the insurance companies, and they do differ from different providers to different providers, but a lot of the insurance companies offer additional benefits. So some of them will give you physio appointments. Some of them have like online counselling services, GP 24-hour sort of GP apps that you can use, medical helplines. There's sort of mental health helplines and things like that. They also offer, and this is kind of a benefit to them as to you as much to you as well, is that they will offer you things like, if you need specialist equipment that will help you get back to work sooner, they will pay for some of those stuff. So I was talking to one insurance provider where somebody had made a claim because they'd had severe burns on their hands, and there was a specialist glove that they needed that meant that they would heal quicker, and it wasn't available on the NHS, and it was quite costly. It cost about £2,000. The insurance company paid for that because it benefits them in the long run. The sooner they get back to work and the sooner they're healed, everyone's a winner in that situation. So they'll help you with whatever you need towards recovery in terms of specialist equipment, or if it's things like mobility aids to help you continue to do your work, they'll let you do that. They'll pay for those sort of benefits as well. The other thing that they can do is, let's say that you weren't able to go back and do your own role for whatever reason, but you were still capable of work. They would help you and pay for any training and qualifications that you might need to change roles. And that's obviously driven by you. It's not, they're not going to ever force you into, well, you must retrain to do this, that, and the other, but they will help you, support you through that if that is something that you do want to do. One of the things I also really like about income protection is that it will let you do a phased return back to work. So if you were employed and you had been off work with any sort of mental health problems, is probably the most obvious one for a phased return. The most employers would say, yeah, come back gradually, take your time, and we'll make sure that when you come back, you're feeling 100% ready to go. Most self-employed people don't have that luxury and will have to kind of do what they need to do to get back on their feet, and they get straight back into work 100%. The income protection providers will work with you and say, okay, you want to come back to work, we can do this phase. We'll pay you a proportion of your benefit while you're coming back to work, and we'll, as you increase your work, we'll reduce that benefit till hopefully you're fully back to work. And again, it's in their benefits to do that, because the last thing they want you to do is to come back to work too soon and then have to go back off again at some point. So they do a lot of stuff in the background to support you. One of my favourite benefits is the second opinion doctor service. So this relates to if you had a situation where you were diagnosed with something. The example I always use is quite an extreme example, sadly, but it's let's say you went to the doctor, they said you've got a inoperable tumour, we can't do anything for you. You can use the second opinion doctor service, and they will send your records to doctors all over the world, specialist doctors all over the world. And what happens quite often with this service is one of the doctors might say, actually, I've operated on this type of tumour before, I think I can do something. And it might be that doctor's in America or Germany or somewhere else, but it does give you options that you wouldn't necessarily have by just going down the sort of NHS route. So that service has been invaluable to a lot of people, actually, and it's really a really valuable service. Again, one you hope you kind of never need, but it's there. And we do, of course, have some income protection providers that offer things like gym discounts and, free coffees and cinema tickets and stuff like that. And that's all about having a certain amount of points, and you have to sort of engage with the premium a little bit, but you get sort of rewarded for the various sort of activities that you do to keep you nice and fit and healthy. So the policy should obviously be there as a safety net for you, but you can make it work for you through even when you're not claiming. And it should offer you, again, some sort of comfort knowing that actually, if you did put your back out, you can go to get some physio straight away without having to wait for, in a sort of queue for an NHS physio. So all those things should help give you more value for that type of policy. The highest claims for these policies tend to be things that wouldn't be covered by other insurance policies. So I can never say it, musculoskeletal. So things like, back problems, shoulder problems, knee problems, all of those things are the top claims for this type of insurance policy. And for most people, those are something that would put you out of action for quite a big period of time. But it's perfectly recoverable from. So you would end up back to work, and you just need something to bridge that gap while you're recovering from that. And similarly with mental health problems is that you don't want to feel that you're having to continue to work when you're not feeling that you can, just purely because you're self-employed and your income could disappear. Again, somebody who's employed might feel a little bit sooner that they can go to the doctor and say, actually, I've been signed off with stress, or I've been signed off with depression. Somebody who's self-employed tends to not maybe explore some of that stuff because they're worried about the fact that they've still got to run their business. And it just shows you on there some of the statistics about the longest period of claim. So I kind of think with these insurance policies, it's a little bit of a win-win in my mind. If you don't ever claim on it, then brilliant, you've been fit and well and healthy and you've never needed to. But then you look at that example of a sort of the longest claim being for 35 years, and he's had over £300,000 worth of benefits paid to that person. Imagine if you didn't have that policy in place, that would have been a huge amount of income to find, or a huge change in lifestyle for that person. And maybe they've got a family to support that they've been able to support that they wouldn't have been able to do otherwise. So it can offer a really large amount of comfort for people to have these policies in place. This just gives you as well an idea of the average claim for the people to make their first claim was for 42 years old. The reason I thought this was important is because most people, and I don't want to generalize, but most people who start their own businesses tend to have, worked and been employed for a few years. And I'd say, I haven't looked at the statistic, but the average age of somebody who's self-employed would probably be slightly higher than someone who's employed. So the fact that you've got this policy in place where statistically the chance of you making your first claim is at 42 years old, it means that, again, it gives you that comfort of, with a life insurance policy, you tend to think, that'll never happen to me. That's a long way away. I don't have to worry about that just yet. But this income protection, you could be a perfectly fit, active, healthy, 42-year-old, and you could have some sort of problem with where you pull your back and you can't work for a while. And like I said, fully recover and be back to your fit, healthy self. But it's whether or not you worry about those things and whether that's going to cause you a problem in your business at a later point down the line. And if that is a worry, it's just making you aware that there are things that we can put in place that will stop that concern. That's what these sort of policies should do, is to take away a worry, so that you've got it there if you need it. Another thing that I wanted to touch on is the If you've got a sort of single income household where the only reason you can run your business effectively is because there's somebody else at home doing all the childcare, doing all the cleaning, they might even be working on your business with you and doing some activities within your business, some of the admin side of it. If the only way you can continue to maintain your business at the level you do is because you've got somebody at home supporting you doing it, we can actually cover that person even if they don't have an income as such. It's called a homemaker policy, but essentially, if that person at home wasn't able to do all those tasks, there would be either a knock-on effect to your business in terms of the amount of hours you could potentially do. Maybe you have to reduce your hours to do some of the childcare, some of the other activities in the house. Or there would be a cost potentially of covering additional childcare. Maybe that's nurseries, wraparound care. It obviously depends on the age of your child. But even somebody in your household with no income, there can be a knock-on effect to your business and a cost to your household if that person can't work. So these policies are in place whereby you can insure up to £1,500 a month. And obviously it depends on what your sort of outgoings are. You can do it as little as £200, £300 a month if that's what would be needed to cover childcare. But you can put something in place whereby if that person can't work, then, or can't look after the children, should I say, then the cost of childcare is covered and you don't have that worry. And that's what all these policies are about, is if you've got a worry, we can put something in place to take that away. And that obviously won't be relevant to everybody, but I thought it was worth mentioning because it quite often is something that's overlooked and something that's forgotten about, is that just because somebody's not earning an income, it doesn't mean that they aren't quite a key part of you being able to effectively run your business. So that was all I had covered on the income protection side of things. And obviously, if you've got any questions or if you want to discuss it anymore, you can let me know.
Thank you very much, Sabrina. That's a great insight into the options and things for people to think about. I think the homemaker policy is something, even though I've not quite worked in this area, but in financial services, I was never aware of. So that's that could be very relevant for quite a lot of people, actually.
Yeah.
No, thank you there. So a couple of questions for you.
Yeah.
I don't know if there's any kind of numbers around. How many people have something like this in place? Is there any ideas?
Do you know, I don't have the exact numbers, but it is very underrepresented in the insurance world. Most people go for life cover first. Then after that, they might take some critical illness cover. And then if they kind of sometimes feel if they've got some money left after all that, then they would go for the income protection. And there's this kind of like triangle of sort of needs that they feel like life covers the biggest need. I would argue that you should flip that on its head, really. And to me, the things that you use to pay your mortgage every month or pay your bills every month is your income. So that should be the first thing that's protected. Life cover is really usually quite a cheap policy. So it would be likely that if you could afford income protection, you could afford a bit of life cover as well. But to me, I would rather have income protection first, then some life cover, and then critical illness cover would be the icing on the cake if you can have it. It's a really good policy and it's got a lot of benefits, but income protection would be my top priority. And again, it depends on circumstances, but things like, if you are self-employed or a homemaker and all those things that can affect your day-to-day sort of life, I just think it should be the priority in terms of being covered. The other thing that sets this type of policy apart from your life covers and things like that is that, if life cover gets paid out, the policy's done its job and it disappears. You've only got one payout on that. Income protection, the policy stays in place. You make your claim, you go back to work, and then if you're unlucky and you have to make another claim, that policy's still there for you to do its job. So for me, that makes it much more comprehensive. But it is definitely I think because some advisors don't necessarily understand the policy quite as much in depth, I think that they don't necessarily recommend it as often as they should. But for me, it should be top priority.
Absolutely, and you kind of touched on there about the cost of it, and I appreciate there's a lot of things that always go into these things. But is there a difference based on essentially what you do? So, as an example, a builder compared to a financial advisor is, whilst obviously the risk of injury at work is obviously higher, but there's also the risk of getting injured in other areas which affect your work more. You mentioned there earlier a sports injury. You break your leg playing football, then you can't go back to being a builder, but you possibly can go back to being a financial advisor. So is there difference in that?
Yeah, exactly. So one of the questions they'll ask you in the application is, the first thing they're going to ask you is what you do. And like you said, different occupations have different risk factors. And the obvious ones you'd expect are builders and roofers and things like that. But actually, for income protection, apparently one of the most common sort of claims for stress is dentists. Apparently dentists is a really stressful job. So so they'll know all this information and assess their risk factor based on that. But they do also ask in the application about things like hazardous activities. If you tell them you go paragliding every weekend, they might, sort of put a little bit of extra cost on the price and things like that. If you tell them you've got some sort of family history or medical condition that could cause you to be more likely to claim, they might increase the cost. So there's quite a lot of hoops to jump through up front to get the policy in place. But like I said, I'd rather that happen up front and then guarantee you the premium than let you pay the premium and then when you come to claim, you have to find out whether you're eligible or not. So it's better to get that all out up front and you know exactly what you're paying and what you're doing with it.
No, absolutely. And it feels like it's definitely something that it could be applicable for anyone, obviously, but especially for people whose businesses rely on them as an individual more than others. So there's some businesses that you could keep essentially ticking over, even if you weren't particularly well. I don't know if you're in an online business, you might be able to do it. Again, obviously, there's extremes of this, but generally speaking, than if you're more of a manual labour type business, or you need to be physically present to be there. I don't know, you drive a taxi or something like that. It's just more likely to be an issue, isn't it?
Yeah, but I think on the flip side of that, the question you'd have to ask yourself as well is, do you want to be in that position? So you might think, do you know what, I do a job where I just need a laptop and a phone. I could do that from my bed if I'm a bit poorly. But depending on the cost of the policy, would you rather pay that a month to know that actually if I was ill, I could properly rest, I could properly recover and come back to work, especially if that issue is a mental health issue? To be able to literally sort of switch off and properly recover is really, really valuable. And I'd argue probably worth the cost of the premium, depending on what that is. And in addition to that, I've spoken to a lot of company directors before that have said, oh, well, I just pay myself a salary, it's fine. But obviously that's eating into their retained profit. And so for them, it might not be about protecting their monthly income. It might be about protecting their business and their retained profit. So it depends on people's circumstances, what it is they're wanting to protect.
No, I think it's a great point about being able to recover properly. I mean, most people, self-employed people tell you even when they have holidays, you don't fully switch off.
So true.
Which is obviously not ideal, but then you take it to the extreme of, illnesses, whether physical or mental, to be able to take a period of time off, and it might be relatively short. It's quite important, and it might aid, it would aid that recovery. So therefore, you can get back into the business quicker.
Absolutely, yeah, absolutely, and less chance of potentially having to take time later on because you've not fully recovered and things like that. So longer term, it could actually be better for your business because you've been able to come back 100% rather than 50 or 60%.
No, that's excellent, Sabrina. Thank you. So if anyone wants to kind of find out more, because I appreciate these type of things are very individual. Obviously we've gone through some general stuff today, but they are very individual, these type of things. Where's the best place to get hold of you?
They can contact me. I can share my email address is sabrina@kindfinancialservices.com. And if they need anything, they can drop me a line or drop you a line, Mike, and I'm sure you'll pass that on for me.
Yeah, as I always say with these things, if anyone for whatever reason can't find Sabrina, please do contact us at Northern Affinity and we'll pass it on. So thank you very much, Sabrina, for your help. And I know it's such an important subject and something that maybe doesn't get enough coverage and probably should get more. So hopefully we've helped that a little bit today. So thank you very much.
Thank you.
Thanks, Sabrina.
Bye.